All right, we are connected for the midweek edition of the news update. So, as always, looking forward to connecting, share my 2 cents on a variety of subject matter. And this morning will be a doozy because we have a lot of interesting developments in the economy, as well as a lot of semi trending updates with the silver market and apparent shift towards the Eastern Hemisphere. And of course, we had silver touch $60 in the Asian futures. And so we're going to talk about that and a lot more. But before I move forward, let's make sure everything is flowing smoothly. If you are checking in, let me know where you're watching from in the chat or in the comment section. Definitely would love to acknowledge your presence. I have maybe 6-7 tabs open, all relevant articles that I think help to further paint a picture as to what's really going on in Main Street outside of the narratives that no longer seem to be sticky with all these job losses. And so heading into the last days of this month, of this year rather, there's going to be a lot of political jawboning trying to continue the narrative that everything is fine heading into 2026. And of course, this current administration, Bassett and Trump, always looks to forward future activities, saying that 2026 is going to be phenomenal. Just wait, tax returns this next upcoming year is going to be phenomenal and great, all that stuff. But right now, in this current moment, the third day of December, heading to Christmas, not too many people are feeling too confident and wanting to spend. I don't have the official numbers, but I believe the Black Friday and Cyber Monday and all those things were flat, if not completely pointless. But we're going to talk about that a lot more. So for those who are checked in, definitely let me know what you're hearing, what you're seeing in your end here. I have, as I mentioned, a couple of tabs open. We're going to go through a little market activity. And also, I want to continue to encourage people, if you have not, I'm going to touch on the Silver IQ quiz and some updates with that and go from there. But we're going to go through a lot of market activity, a lot of headlines, and I'm going to do my best to try to keep this short, concise, and to the point. And as always, for those who are plugged in, if you have not, hit that thumbs up button, hit that check mark, shows support for the channel. And definitely any help with the algos will go a long way. All right, so let's jump into it. First things first, the Silver IQ. How well do you know silver? So as of right now, a good amount of people have taken it. And as of right now, we're looking at averages of about 67%. And it takes about anywhere from a minute 54 to 7 minutes for people to complete this. And so that lets me know that there's a variety of processes to answer these questions, and they're 15 sweet and simple questions that just covers history. So if you're a history buff, you should do fine. If you're not, then this stuff can help you with your monetary journey. And so feel free to click the link in the description to educate yourself there, and I'm sure you will be more than surprised. Okay, so let's jump right into current activity with gold and silver. So as of now, we have 58.50, and of course we might have touched 59. I heard we touched 59, but on this chart here it doesn't show that. And then above my head here we have 4,200 in gold, and so definitely lots of things happening there. And of course on the crypto space, it looks like Bitcoin is getting somewhat of a bounce over the last week. And as you can see here, today it's up 2% over the last week, 5.4%. And so there's lots of activity happening in the financial sector with a lot of banks and a lot of TradFi moving in and further capturing the market. So I'd anticipate to see an upward trend there as well. All right, and so as of right now, S&P 500 with some of the MAGA 7, NVIDIA, Microsoft, Amazon appear to be down, but then Apple's up, Google's up, Meta is down just slightly, but it's early morning activity, and everything that we're experiencing right now with the legacy system is predicated on information coming out in reference to the ADP numbers. And so let me share with you some headlines here, because this is going to be very interesting heading into next week when the Fed will meet and determine if they're going to cut, and will they keep the cut at a quarter or have to move it further. That's going to be the question, because clearly with stuff like this, payroll at U.S. companies fall by most since 2023, ADP says. And so it's like headlines like that, like 2023, that's during that Biden time frame. And we know from previous updates that the whole Biden job era was a facade. And so literally what this shows is that things haven't really gotten better for the average Joe and Jane in the labor market. Here's another one. ADP says U.S. economy lost jobs for a third time in 4 months, Fed to weigh weak labor market rate cut vote. And so businesses cut 32,000 jobs in November, marking the biggest decline since spring 2023. There are 32,000 jobs. There's no way this administration can come on air, put out a tweet, and say that everything's fine. The economy is booming. Everybody's satisfied. We're going into the holiday season with extreme confidence. Because clearly, when you got 32,000 jobs, losses, that lets you know that 32,000 families potentially are rethinking this holiday season and trying to figure out and re-strategize heading into 2026. They're not thinking about no tax refund checks at that time. They're thinking about the next paycheck. And I haven't checked, but I'd imagine unemployment has continued to climb. Let me just grab that real quick, because that's another way of getting the unemployment rates climb. Let me see if I got some new news. And so we have, I'll jump here. And so this is just something worth touching on. And so other than 2 weeks ago, doesn't look like there's any recent updates. But once again, this plays into, let's just go back and see. So here we have on the screen the unemployment rate. And I went back 3 years just to put us towards that 2023 time frame. And so going back to this is December, November. So this is November. Nope, let's go right here. This is November of 2023 unemployment figure, and it was 3.8%. And so literally, since the Biden era, there's been a continual increase in unemployment rate to the point where now in September it was 4.4. So it's good to say October, even though we will not get it because the government shut down. They're going to make sure that they don't give it to us because of concerns of this nature. But it was good to say that if it's 4.4 in September and it was an all-time high, all-time 3-year high, it's good to say October was probably 4.6, 4.7. Therefore, expect November to be 4.8, 4.9, give or take. But we're not going to get those figures because this administration can't afford to have any type of data points point to a recession. So clearly, all this unemployment rate, all these layoffs, and we know the economy isn't doing well. Are we not in a recession? At what point will they admit that we're in a recession? Clearly they can't because of this whole narrative to make sure everything is hunky-dory heading into 2026. And it's not until we have an artificial surge, whether it be this intended crypto surge or the Fed cutting rates beyond a quarter point, and then we got the potential announcement of the next Fed chair. And so clearly going to be an easy money policy type of administrator or chairman there. Until we get that, what I always consider, which will come, will it come before the crack in the system and the emergency response, or will it come in anticipation of just this artificial surge, that MAGA wealth effect? Because as of right now, the president is out here talking, and if he doesn't have proof to back it up with this robust economy that he's talking about and future expectations of just American people being overwhelmed with the amount of abundance and blessings that we're going to have from this tariff revenue, at some point he's going to be made to look like a liar unless he get all the people around him that's working for him or working along with him on the same page by showing proof. And that means equity surging, metals will continue to surge regardless, crypto surging, and anything that gives the illusion of wealth surging, it's going to look very bad for his administration, especially heading into midterm. And so between today and the time midterms arrives, heading into spring, if there's not proof that this economy is booming, it's going to be a lot of unhappy voters heading into midterms. And of course that rebate, dividend, tax check, whatever is going to come right before won't cut it. A measly 1,000, 2,000 will not cut it, buddy. So that's just something worth considering there from a people who think that this is going to be a smooth transition. So here's just a couple of the headlines here. It says, Stock market today, Dow, S&P, NASDAQ under pressure as key ADP job data shows weakness. There's no smooth landing. There's no smooth. I remember back in the day when we were talking about Jerome Powell was talking about a smooth landing and soft landing due to all that inflationary stuff. But here we are now. QT stopped. And when QT stops, that means that there's going to be need for an immediate and direct injection of liquidity outside of the current lending windows offered to the banks, because reverse repo's done and we're going to need some fresh liquidity. Therefore, the monetary spigot going to have to be cut on, and it won't just be able to be slowly and gradually turned on. It's going to have to they're going to have to turn that thing, and it's going to have to gush out all the liquidity going to be needed to make this transition smooth. And so we got Michigan Last says, never heard of people getting laid off the rate in the last 20 years. Always at the end of the year, Merry Christmas and have fun looking for jobs. Yeah, that's unfortunate. Grass guy, good morning. Yeah, I will make most of these jobs. Yeah, so once again, I saw a headline the other day, and I shared it in a Telegram. So if you're not in the Telegram, that's where they get the most and the most direct information first. But in this article here, and of course, I got to consider the source, it's coming from CNN, but we know that at the end of the day, all parties are working together. But in this video here, we have the mention of universal basic income. We have former candidate Andrew Yang out here basically saying that because of technology and where everything is heading, there will be a need for, is it time for universal basic income? And this had 517,000 views. And so this was Andrew Yang ultimately pleading his case as to why universal basic income is going to be a necessity. So outside of the idea of Donald Trump talking about there being no more of a need for income tax, you see how the UBI narrative, which is going to be inevitable, and the no income tax go hand in hand. Because if UBI is offered or demanded by the people because of the economy at that particular time, it's going to be given through payment railways that are already structured to reduce income if need be. So you won't have to directly pay income tax, because whatever tax there might be at that point in time might be taken out directly or factored into your UBI allotment check monthly after your behavioral scores are accounted for with the digital ID network and all the things that go along with that. So you can see how this is all shaping up to be exactly how it was foretold well before now. A greater totalitarian state where the technocrats at the top, along with the captured political figures, work hand in hand to pull off the Great Reset. So, yeah, this is just some things worth considering, my good people. Okay, let's keep it going. So here we have just another little headline here I thought was interesting, because you have the investment markets now. They're trying to predict the size of the cut, the rate cut. It says why next week's Fed meeting on rate cuts could be the most chaotic of 2025. It says, will the central bank cut rates for the third straight meeting? And then this is by Matt Sexton as of, 2 days ago, but it says, with the Federal Reserve rate decision a little more than a week away, all signs point to a razor-thin margin of the Federal Reserve Open Market Committee, with dissents to the majority decision a strong possibility. It says betting markets have swung back and forth over the last couple of weeks on the odds of a 25 basis point rate cut. It says the current bet is that the Fed will slash rates for the third straight meeting, but the debate will be contentious. And so as of right now, markets, analysts are basing on another cut. Now, quarter point is going to be the question where I would put out there, because 25 basis points doesn't really do anything other than just continue to offer what's already obvious. And with the job pressure, as well as the slowing down of the economy in general, the only way you can get this thing juiced is if you make a heck of a statement by going half a point or 75. Why not make it a whole single point? Take it from, whatever it is now. Let me see what I've been mentioning this for quite some time, and it's quite obvious where things have to go. It's so obvious where things have to go. It's very concerning that people wouldn't consider that to be the case. But let me just bring this on the screen here. So all this is just political rhetoric until it's actually finished. So here we have the Fed funds rate, which of course bond yields ultimately determine, and the free market ultimately determines the rate they're willing to pay for U.S. debt in conjunction with these rates here. But as we can see here, the trend has already been set. We're going down, baby. The only way they can pretend to keep this thing afloat is to take it down. And it was down at zero for a very long time, to the point where them bringing it back up has been a part of the problem. And so literally going from January of 2009 to November, or I would say, when was it? Okay, so till November. No, let me go. I'm sorry. When we got back into the one territory, until June of 2017. So that 8-year time frame was enough to have created more currency that can ever be accounted for. Therefore, when they decided to hike rates and then cut in the middle of a health situation, and then hike rates and then cut, and what I would consider, so this cut here, which clearly based upon all the previous cuts, they cut here, recession, they cut here, recession, they cut here overnight for the most part, a recession, and they've been cutting here. And so this is called the silent recession. This above my head is called the silent recession. Let's treat the American public and the world like they dumb recession. And so here we are now at 3.88 in November of 2025. And so another quarter only puts it at 3.63. And that's nothing. That does nothing. In order to really get this party started and to really keep this narrative of everything is fine going, they're going to have to cut clearly back down to 2 just to get a jolt in the markets. Stocks will go up a little bit. But then again, what they are probably very cautious of is gold and silver will explode, because the whole point in trying to slow walk this is to make sure that they can control the narrative, both the equities as well as the overall underlying economy, as well as the job narrative, as well as all the other things that is factored into the FOMC and this presidency trying to kick the can further. And so we're at 58.62 now, and it touched 60 in Asia, and with all the narrative of everything shifting towards Asia, clearly once they decide to cut, that is a direct admission of default on previous borrower or lenders. So therefore, I can see 65 to 70 within that same 24 to 48 hours of that large cut when it comes. Because whether it's Jerome Powell or the incoming Fed chair next year, they're going to be cutting substantially, and therefore gold and silver will continue to climb, and the surges will be unbelievable. And by then, with all this crypto noise, the goal is to have crypto surge along with it, because that is the admission of an abundance of creation of currency that will definitely find its way into the system. And that's just part of the story. Okay, let's keep it going. So at this current moment, I want to share with you some information developing out inside of the Twitter sphere, or let me get something here. So out in the Twitter sphere. But before I do that, let me just offer a quick little, I see some more comments. I've been living off of sports gambling for the moment. And so for those who are new, let me just take a minute and share with you some resources and things of that nature in the description. Then we'll keep going and get into some more silver news. So take a listen to this.
Sick of watching your savings lose value? Now's the time to get your weight up. Visit the RTD Silver Team Store and either start stacking silver or add to your current silver stack. Because by getting the people's money, you're protecting tomorrow by stacking today. Click the link in the description to find out more information. Looking for ways to get affordable gold? Then it might be time to redeem your Federal Reserve notes to spendable 24-karat gold notes. It's real value you can control, and it's a great way to protect yourself against inflation. To get yourself some, go to buygoldnotes.com or click the link in the description. And last, if you're looking for alternative banking, look no further than UPMA Precious Metals. Banks aren't protecting your money. They're actually using your deposits to extend loans, which expand. Take a watch.
So let's just get right into it. I want to go right into the some things I have bookmarked on X because there's always good commentary there, and I want to make sure I deliver it to you straight. So let's get to it. So here we have a TF Metals report. So this came out an hour ago. It says second episode of the day for the silver futures price as it nears $60. So we got up to $59.50-ish, and of course they came in opening market time frame and slammed it down. But here's where it gets interesting. Shanghai Chinese silver update as of today. This is an hour ago. $60 falls first in the east. So literally it says it hit $60.80 an ounce on Wednesday in the Shanghai Futures Exchange. And so mind you, Shanghai Futures Exchange, they deal in physical. And so literally I'm hearing more and more stories coming out of the Eastern Hemisphere that's very positive for the long-term trend of silver. Silver places new record high at 59.84 ounces. Says huge inflow of 32 metric tons into the Shanghai Futures vaults on Wednesday. It says have the Western bullion banks paused their plundering of silver out of China as silver reaches $60. And so here's just some information here that points to all the current price activity as of December 3rd in the Shanghai, based in renminbi, converted over to USD terms. And so very interesting news there. Then here we have an interesting thought. U.S. is in a recession. ADP, U.S. November private employment falls 32,000. Then here's a Christopher Aaron report. It says silver has proven itself that this breakout is for real. First intermediate target is $96 based on the amplitude of the entire 45-year consolidation, likely much higher targets to follow once the moves matures. So as you see above my head, here's all the TA based upon the momentum as well as the current trend of silver. That's definitely something interesting. Then we have JP Morgan reclassified 13.4 million silver ounces from registered to eligible. It says the rest of the banks are so screwed. So literally, having it being registered to eligible. Eligible means available for departure. So that's going to be more of an incentive for people to take advantage of the opportunity of getting physical now and not waiting for a future delivery date because the price will probably definitely be higher. And then here's some other, it says investors are rushing into the silver market. So now we have retail, but retail unfortunately is going into financialized products, ETF holdings. But nevertheless, that's still going to put demand on the ETFs to go out and actually get physical to account for all those claims on the silver. It says physical silver backed ETF holdings jumped 15.7 million ounces in November. Year to date, silver ETF holdings have increased 9 of the 11 last 11 months. It says, meanwhile, silver skew as an indicator of call option volatility jumped 8 percentage points over the last 2 weeks to 10 percentage points, marking the highest premium over put options since March 2022. So people who are trying to get exposure to the markets it's going to cost you more. It says that put differently, betting on higher silver prices is becoming extremely expensive. So if you are out here taking advantage of options and stuff like that, think that you can go ahead and just put some cash on the side and just use the paper game of silver and bet on that, it's going to cost you because it's becoming more expensive because it's becoming more obvious the price has to go up based upon all the interest. So silver prices have soared 101% this year, on track for the second best annual performance in history, over only below 435% gain in 1979. So think about this. As of right now, we're only at 101% price increase over the last year, and that's second to 435%. So imagine if we were to have a repeating pattern of that same price activity within a year's time frame. So Right now it's 101%. 1979 it was 435%. So imagine what 435% will look like, say, next year, given the current price we have, and we're at $58. That's 4x from here. So that's clearly a 435% type move in the fiat price, not even adjusted for inflation and it's bogus CPI figures they give us. We're talking about at nominal value right now today, 4 times now would be literally 200 plus ish an ounce if we were to use that same 435% increase within an annual year. That, my friends, is something worth talking about. Yeah, but let me keep it moving. Precious metals are on fire. So here's a little chart here. Here's a little chart here that paints the surge. And so as we've seen just in 2025 in general, there's been a continual uptick and there's a slight drawdown for whatever reason, but that's just something worth paying attention to. And let's go a couple more here and then we will move on because there's going to be more news developments. And so here is a video that I came across that just talks about some of the details. So it's a translation. So it's just the lips is not the greatest lip service, but it said the COMEX is dead. Swiss prime precious metal expert Johann Staver reports a potentially seismic shift. Major players are allegedly dissolving the Europe trading desk and moving operations to Asia. Then it goes on to talk about the context. This follows historic fines for super or saver price manipulation. So for silver price manipulation, i.e. JP Morgan, the move suggests to be a strategic move potentially for legal installation and proximity to the new center of physical gravity, Shanghai futures. It says the market structure is showing highly unusual and telling signals. Falling COMEX open interest while prices rise sharply, the divergence makes no sense in a normal market and indicates participants are leaving. It says reports confirm really big players from the CME are turning their backs and going to Asia. Concurrently, gold inventories at the Shanghai Futures Exchange are rising slightly. Nice little video here where more in-depth information is given, but it has 22,000 views, and I saw Bill Steele on the Steele Report also commenting on what he sees. So clearly there's a lot of excitement in gold and silver, and it's not happening within the U.S., of course, because the U.S. has been the bedrock of price setting mechanisms for the last 50 plus years, and that's changed, obviously, because I don't think the U.S. is setting gold and silver price at this current moment, because both are at all-time high territory. And we've been talking over the last several years as to how the moment the Shanghai Futures Exchange places the yuan, aka the renminbi, as the primary measuring stick against gold and silver, that right there is the ultimate game changer. And so that's where we're at now, and we're not even out of 2025 yet. So this is what a reset of the monetary piping looks like. While the East is focused on physical price possession of metals, the West is talking about gold and silver, stable coins, real world assets, and all those things, which will also be a part of the system. And so the question is, what excites you more? Is it the metal side, or is it the crypto side, or one and the same, or both? What's your strategy? What's the plan? What do you plan on doing? As we enter into the 2026 where they decide to cut on the monetary spigot, and there's a nominal price of valuations of everything, what are you going to let go of? What are you going to hold? What are you going to get more of? What you going to do? Those are things that are worth talking about and considering. And of course, that's what I'm trying to do on my end now, just to lay out some future checkpoints of things that I want to try to accomplish and get involved with, just for diversifying my approach towards investing as well as speculating. So lots of things were up there. But it looks like Modekin Last is very active. Says, I love it. It's a lot of fun, and I've been making money. Says, a one world communist government will be the end of humanity. Globalists will like machines because they are cheaper than people. Really strange and critical times for the human race. Oh, 100%, man. 100%. But then again, we knew this was coming. This is all a part of what some might consider end time prophecy, and then others might consider just it to be the normal trends of the advancements of technology. as AI and robotics merge, we're going to see a lot more interesting developments, as well as discoveries that mankind were not able to discover based upon human intellect. So you take human intellect, mix it with data and science and math, you combine that together, there's going to be a large amount of new technologies as well as discoveries that will also be exciting. Depending on how you're looking at things and what you're looking for in this next couple days or so, meaning years, that'll probably be what we can expect. So if the mind can think it, then I'm sure you better leave somebody working on it. So anyway, but this is what's happening. For those who have come in late, I'll get a chance to go through this, see what's up. A lot of interesting breakdowns here. Will the Fed cut 25 or more? It don't matter because they're going to have to cut multiple times in the next couple of months. And therefore, expect more liquidity. Expect gold and silver to go way higher and faster than anything else. And we'll see what else they try to throw our way, whether it be some type of an event. Of course, Venezuela going to be invaded. Ukraine is still on the table. Israel and Palestine is still going to be an issue. So that could be 3 military issues. Venezuela, Ukraine issue, and the Palestinian issue on top of the things we don't even know about. So anyway, it's going to never be a dull moment. But that being the case, be blessed, be safe. Enjoy the rest of your day. Peace. I don't know what I'm doing.